They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025. So there is going to be, I think the feature of the second half of 2022 into 2023 will be regulatory uncertainty.
Welcome to Dream Richer. There is a special word that strikes fear in the hearts of all who hear it. Those special words are the feds. The Fed is the central bank of the United States, responsible for regulating the financial system and managing monetary policy. Its primary monetary policy tool is open market operations that control the buying and selling of U.S. Treasury and federal agency securities. Such purchases and sales determine the federal funds rate and, in turn, affect interest rates throughout the economy. The feds oversee the regulation and exchange of money. This is already clear in the stock market being regulated by the Securities and Exchange Commission, abbreviated to SEC. In their words, their prime mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Despite these remarks that may seem pleasant to the ears at first, many investors believe that the feds have abused their power in the recent years. With unlimited money printing, along with interest hikes, there seems to be no cap on the power of the feds. As such, crypto investors, which have been safe from the feds until now, demand to be left alone altogether. This is because the prime mission of crypto is to stand as a decentralized means of exchange. Hence, having the feds enter the space counteracts the intrinsic nature of crypto altogether. By the end of this video, Raoul unravels the mystery of the feds finding their way into crypto. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
I think regulation is going to meet us where we expect, which is going to allow people to do this. They're just trying to get comfortable. I mean, regulation's very far behind in the space, but countries like Switzerland, Singapore are leading the charge here. I think we'll see the same coming out of Dubai. And I think eventually Europe will start to figure out, okay, what is the right strategy? And I don't think it's going to be about blocking access. It's going to allow people to understand what the risk is. Because a lot of this space is really like VC investing. Now, traditionally, unless you're a wealthier person, you're not allowed to invest in VC, which doesn't really wash in this day and age, particularly with a very skewed younger population, millennial. They want access to attractive rewards with equity markets at all-time record valuations, property at record valuations, bond yields at all-time lows. Their opportunity set, and real estate super expensive, their opportunity set is very low to generate future returns. And crypto is the market that they really are interested in. So it's quite difficult for politicians to go against such a large group of voters. So it's really interesting. There's a battle to be fought about regulation, but I think a grand compromise will be reached that will keep everybody happy, allow KYC, AML, and all of the things that the state organizations need. They will try. And as I said before, it will be a battle that will not be finalized, probably in, let's say, till 2025, when we'll eventually have a set of digital asset laws as opposed to using the existing infrastructure. So there is going to be, I think the feature of the second half of 2022 into 2023 will be regulatory uncertainty. Obviously for institutions, it's relatively straightforward now. Most of them have an ability to buy Bitcoin and other things. It's the battle is for the retail market and the launch of the CBDCs out of the central banks. Europe wants to get theirs launched whenever they can. The US is working on it, but is further behind. India is about to go. Singapore is about to go. Everybody's about to launch theirs. And what they want is to get everything in order while that happens, because what they're creating with the central bank digital currencies is not a competitor. They're creating the digital on-ramps and off-ramps. So they want to make sure that they capture what they need, which is their tax take, and to understand the KYC, AML elements. So I think DeFi's got a fight to come as well, because there's very limited KYC and AML that will be imposed in some way if you want to onboard and offboard via the central bank digital currency.
Despite many describing crypto as a decentralized money protocol that cannot be controlled or regulated. However, this statement has not aged well over the years. For example, the most used crypto platforms, such as Binance and Coinbase, have already begun introducing regulation. Even though this regulation is not as strict when compared to the stock or bonds market. However, the initial effects are already being seen. Just take KYC, for example. It means know your customer. It refers to a financial institution's obligation to carry out certain identity and background checks on its clients before allowing them to use its product or platform. It is part of a broader set of measures that regulators around the world use to fight money laundering. In fact, KYC measures are now a must for any crypto platform looking to offer services in jurisdictions like the US, Australia, and the UK.
Well, you've got a double-edged sword going on here, a double play. One side, they're obviously in Washington trying to slow down crypto adoption because it's a very disruptive business model. They want to slow it down because on the other side, they're all building out digital asset groups. Goldman has built them out, JP Morgan will be building them out. All of the banks are building out digital asset groups. So don't listen to what they say, listen to what they do. They're building trading, sales, advisory, everything. I think they're just trying to slow it down. I think the bigger issue is not for Wall Street, but for the main money center banks, whether it's in the US or Europe, where what do they really offer in this world? I mean, particularly in Europe, where the banking system largely doesn't really work. It's the inability to get money around the system. And DeFi offers a complete change there. So I can understand that Europe's a little bit nervous because of its own banking system. And the small money center banks in America, 20 years' time, they won't exist. There isn't a purpose for them. But the investment banks will be at the center of this, as always. A lot of wealthy people have been using crypto for capital flight, but that still continues via Singapore. So it's still going on, but they're trying to slow that down. They wanted to get rid of the mining because mining was competing for uses of electricity and driving up electricity prices. You know, China's big aim is to not allow social unrest. So what you really need to do is not allow prices to rise as much. So not to allow the miners to use the electricity was one of those. So, and we've seen this with China a couple of times. They ban it, they change it, and then they reopen and allow it. And I think they will. I think they're not going to stop a technology like this where they can have an advantage for their firms as well. I think central bank digital currencies are actually quite a breakthrough for many reasons because we don't have monetary policy and fiscal policy is not very direct. You can't give it to people who need it, and there's always people in the middle. And that's particularly prevalent in the United States. With central bank digital currencies, you can exactly stimulate who you want. Let's say there's a huge flood in one part of Germany and people are homeless, and normally they might have to have a fiscal stimulus package, but now you can give money directly to those people only. So I think there's a lot of benefits. I think the central banks understand that the blockchain technology world is the future of the entire financial system and the digital world itself. And they need to integrate with it for the modern age, for speed of transactions, cheaper transactions. They're trying to increase velocity of money. So I think there's a number of reasons why they're still interested in this. I think it's also going to help them with their tax take and less leakage out of the tax system, because cash has more leakage than anything. I think for them, it actually suits them. It'll increase their tax take, increase velocity of money, and increase the ability to stimulate their economies.
It's clear from Raoul Pal's discussion that crypto is not far behind the stock market when it comes to seeing regulation being introduced. The feds and other regulators have already introduced methods, such as KYC, to ensure that crypto becomes more centralized. For an average Joe, this means that the government is aware of your every transaction, profit, losses, and as such you must pay taxes. For criminals, this means that their every move can be traced and linked back to an account or location. Hence, the government has eyes on everyone. Not everyone is against the idea of regulation, however. As Mr. Raoul argues, having a more regulated crypto will bring trust back to the market and instantly skyrocket its total value as more whales begin to join the game. Do you agree with Raoul Pal? To learn more about the latest crypto news, watch these videos here.